This is one of our top trading systems that is in the portfolios that we are trading live. We traded this strategy live today. It was our best winner on the day, and the Nasdaq took a short trade. It is AT 2022. It takes long and short trades. And here was the trade today. Not a huge trade. One of the things you'll notice if you're a day trader is that you have the market that closed here on Friday, last trading day. This is a custom session for the day session. It goes from 8:30 a.m. to 3:15 p.m. CST, or 9:30 a.m. to 4:15 p.m. Central Standard Time, and the red line indicates that. And so the market closes here. It opens the first trading day of the year, the day session, and you can see the entire net gain was the overnight gap and to about here. And so you draw a line across here, and you see that the trend for the day on the downtrend was actually over, based on the closing price, 30 minutes into the day session. So if you're looking this type of market, when you're looking for confirmation, oftentimes it's over, it's fast, but this strategy was able to capture this move today, and it's a strategy we've had around for a long time. We've made some modifications over the years, especially for stop losses or profit targets or exits. Now this exits earlier in the day than the long trades. Long trades will tend to hold trades closer to the close, while short trades will exit sooner. And here is the equity curve. Here it is $80,900 using $25 round trip slippage and commission, $40,000 on the long side, $40,000 on the short side. So very balanced strategy. A smaller drawdown on the short side with 132 trades on the short side, 133 trades on the long side. Extremely well balanced. And we're going back 7 years, so all the way back to 2017. You can see periodical returns. Some years obviously have a lower range. 2023, it started to approach the VIX characteristics of 2017, so it was only up $855, even though 2017 even did better than this. So starting out the year with a nice gain of $1,600 on the short side for AT 2022, but early on in the day I was uncomfortable taking this trade. Some of the best trades you're uncomfortable with, and so you say, wow, gap down, quick sell off, and you know this seems like it's over. It comes back to the beginning, you're up, and then it goes back to the beginning, then it rolls over, looks like it's going to come back again, and it comes down here. You know, at the end of the day, everything looks, in hindsight, everything looks clear, but during the day it's not so clear, and this looks like a bad trade. And I test ideas like this during the day. Can we make this better? So I'm going to talk about Easylanguage to improve this, to potentially improve this strategy if we can. And so I'm going to discuss the rules for exiting this and show you the code for that particular exit, not for this strategy entry, but for the particular exit. You can also think about entries as well. So if you're in this market and you say, you know, we have a gap down, we're below the previous day's low. Should we take shorts below the previous day's low? So what I'm going to do is I'm going to turn off the long trades, and we're going to look at just the short only signal, and then we're going to look at this one rule here, adding this rule to the short entries, and the close of the current bar is greater than low D. When you add the D, it's referencing the day session, the entire low of the day session, and then the 1 represents yesterday's low. So if you want to reference yesterday's low, you simply go low D parentheses 1. And so we can say, hey, we're not going to take short trades if we're below the previous day's low. Will that help our strategies or hurt our strategies? So I've gone in here and I've created a duplicate strategy because I don't want to change the original strategy for quality control. So I created Test Active Trader 2023 1M, and I've turned off the long signals, and we're going to see what the results for just the short trades, and then we're going to test it with that one rule that I just showed you. So we're just looking at short trades, and you see an accelerating equity curve. This strategy has some nice short trades. What did it do in 2023? At $12,000 on the short side, and we saw that it was not very profitable. It was around break even when you have long and short trades. So what's uncanny about this strategy is how well it did on the short side in spite of how much of a bullish market we had in 2023. So this is a really good strategy to have because of its history and because of how well it can do on the short side and the long side historically. And so you can see 40,410, which is what we saw on the short side, only $306 average trade profit. And let's see here. That popped up from another chart. This is for the AT 2022 NQ. So you see the equity curve here. You see the performance summary. Now I'm going to add this rule, and the close is greater than the low of 1 day ago. And so this is how we're going to test this. I'm going to simply add this rule to the short conditions to see if it improves the short trades. So here are the results. It reduces the number of trades. It takes out today's trade. It would not take today's trade because it is below the previous day's low. We don't want to enter it. We might think it's oversold. We aren't going to sell it here because it'll bounce. And so it's still a good strategy. The average trade profit is higher, but the total profit of our drawdown is lower. You don't get as much profit out of this strategy if you add that rule, and you lose today's trades. You cut last year's trades in half, and so the strategy is not as good when you add that rule. So I commented this rule out, and I added this rule to the exit. So this exit techniques is basically a profit target for the short side. And so if the market position is -1, then we set the profit target to 1200 instead of letting it run, because the market has a tendency to feel like it's going to bounce on short trades, and it does. But does that improve the strategy? Let's take a look at what it would do in this strategy. And you can see today it would still take the trade because we took out the entry condition filter, where it would not take trades if it's below yesterday's low. It still took the same entry. It has a profit target. It's hard to watch a strategy go through a scenario where it is up around 1200 or 1400, comes back to break even, and then eventually ends up plus 1600. If you're a short-term day trader, a lot of systematic day trades don't look smart. They look dumb, and you try to fix them, and oftentimes when you try to make them more complicated, you don't get the strategy is not as good. So this looks really good from here to here since July, but it's not nearly as good as the $40,000 strategy. It made $40,000 without these extra rules on the short side only, and so this just isn't as good. Let's take the short trade and make that, let's test it with a $2,000 profit target. So a little better with the $2,000 profit target than the $1,200 profit target, and a nice equity curve, not as good as the no profit target version. So here is something else I tried, and here is the rule, the third rule I tried, and the third rule that I'm going to show in this video. If market position equals -1 and low of the day of data 4 is less than -1200. So data 4 is the advanced decline line. Oftentimes it goes, you can see what it did today. It went down here and just it came right back up. Even though the market is kind of diverged, the advanced decline line is more of a broader market. Nasdaq is a narrow. Nasdaq was trended down. This one trended up overall, and you can see kind of oversold territory can be -1200 or beyond -1000. So if you say if it's -1200, do we cover, or if it's -1200, do we set a profit target at a certain level? And that's a good idea, but it does not improve the strategy longer term. Longer term, you find the back-tested results do better with less rules like this to override the short-term swings, even though it might seem dumb in the short term. Oftentimes, you're looking at trades and you think on any given day, it would have been better to do this, but longer term, it works better to have a basic set of rules, because you don't know. Oftentimes, you'll see that for the day, you'll adjust it, and then the next trade you'll miss a big winner because you wanted to have this shorter term micromanagement of these rules. And so this is how algorithmic trading works, and oftentimes simplicity and consistency can be the best approach. We continue to always look for better ways to trade. And so I just want to share some observations with you today on taking short trades in this market, and what seems to be the case isn't often the case. And so you have to test it and look at the data. The basic stop losses and time exits work best for this strategy, and I've reset it to show you the most simplistic exits that can have a wide range of results, but better results overall. And that is AT 2022 1 minute, the trade of the day in the Nasdaq futures on this. Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.